Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock. With news, the strength of global labour markets is still on display, especially in the US. But first, despite mortgage interest rates back rising again, last week mortgage applications in the US rose as well, and that breaks a 3-week retreat. For all the talk about how Americans are supposedly loading up on more credit card debt, the latest data on overall consumer debt for January shows it rose a very modest $15 billion and far less than was anticipated. But the key overnight news has been the release of more data that points to a hot labour market not fading yet. We get the US non-farm payrolls report for February this weekend, and it is expected to reveal that their employment rose by 205,000 on top of the prior month's 517,000, which was an unexpectedly good gain. Today, the private ADP precursor report was also strong for February, showing a gain of 242,000, well above the expected 200,000. That has changed the risks for the non-farm payroll movement to the high side. All this data is keeping pressure on the Fed. A return to outside race hikes is more likely now, starting at their next review on March 23rd, a rate that has already risen to 4.5% so far. A rise to 5% is priced in, and markets expected to rise to 5.65% within the next 6 months. Locally, we should also note that our own 2-year swap rate rose to 5.54% yesterday, its highest in 15 years. Meanwhile, the Bank of Canada has kept its policy rate unchanged at 4.5% and maintained its qualitative tightening in a well-signalled and expected decision. Inflation is running at 5.9% there, but their central bank thinks it's done enough now with rate rises. It thinks their inflation will fall from here. In China, their housing woes are having an interesting impact on mortgage borrower sentiment. Homeowners are paying down their loans much faster. Also motivating this are cash shifts back from disappointing returns from investment funds. This overall impact is showing up in bank earnings as banks miss out increasingly on the long flow of interest earnings. In Australia, and in an overnight speech, the RBA governor went out of his way to make 2 points. Firstly, that future rate hikes by them are uncertain and very data dependent. And secondly, they don't care where the US rates end up. They're not trying to match them. This added a very dovish overlay to what was a hawkish RBA statement on Tuesday. Markets now have to figure out the RBA's resolve in beating inflation, which is currently running at 7.8%. US Treasury 10-year yield starts today at 3.99% and a net 3 basis points higher from yesterday, although in between it got over 4%. Powell's congressional testimony is moving this around today. And the price of gold will open today at $1,817 an ounce and down another $4 since yesterday. And oil prices start today down $1.50. It's just on $76.50 a barrel in the US, while the international Brent price is just over $82 a barrel. And the Kiwi dollar is down marginally, now at 61.2 US cents. Against the Aussie dollar, we're little changed at 92.6 Australian cents, and against the euro, we're little changed at 58 euro cents. That all takes our trade weight index to 70.1 and little change from yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.